Can a bonus cause an underpayment tax penalty? Have you ever wondered if receiving a bonus could lead to an unpleasant surprise at tax time? Let's break this down and see how bonuses can impact your tax situation. Yes, receiving a bonus can indeed cause an underpayment tax penalty. This happens when the taxes withheld from your total income, including the bonus, are not enough to cover what you owe for the year. The Internal Revenue Service expects taxpayers to pay most of their taxes throughout the year. This can be done through withholding or estimated tax payments, rather than waiting until you file your tax return. To avoid penalties, you need to meet certain thresholds. The Internal Revenue Service requires you to pay at least 90% of your current year's tax liability. Alternatively, you can pay 100% of your previous year's tax liability, or 110% if your adjusted gross income was over $150,000. If your combined withholding and estimated payments fall short of these amounts, you may face an underpayment penalty. Now, how does a bonus fit into this? Bonuses are treated as supplemental income and are often taxed differently than your regular wages. Employers usually withhold taxes on bonuses at a flat supplemental rate or combine them with your regular wages for withholding purposes. If the withholding on your bonus is insufficient to cover the additional tax liability it creates, you may find that your total tax payments for the year are lacking, which can trigger an underpayment penalty. The Internal Revenue Service assumes that withholding is spread evenly throughout the year. However, bonuses often arrive as lump sums, sometimes late in the year. This can make your total withholding appear uneven. If your withholding and estimated payments do not meet the required thresholds by the deadlines, you could owe a penalty, even if you pay the full tax due by April. To avoid this situation, consider adjusting your withholding. You can ask your employer to withhold extra tax from your bonus, sometimes up to 50%. This can help cover the tax liability created by the bonus income. Another option is to make estimated tax payments. If you expect a large bonus, making quarterly estimated tax payments can help spread out your tax payments and avoid underpayment penalties. It's also wise to monitor your total tax payments. Keep track of your withholding and estimated payments in relation to your expected tax liability, especially if your income changes significantly due to bonuses or other supplemental income. Lastly, you can use the safe harbor rules. Aim to have your withholding and estimated payments equal to either 90% of your current year's tax or 100% of your prior year's tax, or 110% if your income is high. In summary, a bonus can indeed lead to an underpayment tax penalty if the withholding on that bonus and your other income does not meet the Internal Revenue Service payment requirements throughout the year. By proactively managing your withholding and estimated payments, you can minimize unexpected tax penalties and improve your financial planning.